All right, what up, everybody? This is Jeremy with Escape Velocity Trading, coming at you for another market bias update report for Sunday, April 27. It is about 4 p.m. Pacific Standard Time. Futures market opened about an hour ago, but before we dive into charts, as always, let's review last week's trading success and or failures. Ended up having 6 winning trades, 5 losing trades, total of 11 trades, and ended up gaining $2,437.50 for the week. As you can see here, I ended up actually having a great gain, $8,000 right out of the gate on Sunday afternoon when futures opened last week. And then the rest of the week ended up giving some back, fighting back, gaining a little bit more, giving some back again, yada yada. Ended up basically giving back a lot of that initial $8,000 gain last week. It was just really hard last week to actually catch the movements that were going on. And some of the signals ended up getting faked out. And long story short, ended up making just shy of 2,500 bucks last week. So going out to the charts, where we are in the S&P 500, looking at the futures chart here, let's switch actually and go to our ETF list. There we go, looking at the S&P 500 on the ETF. So SP 500, we had a pretty significant gain last week, did break out of our longer term diagonal resistance from this bear market trend, which is a bullish condition. We do have the decreasing 50-period moving average that will probably converge down to about 560 by the time price gets to that. I could see markets doing one of two things this week. I could see it either stalling out and going neutral for a couple days or giving a very, very shallow pullback. And then continuing up to 560, or conversely, I could see prices moving up to 560 and then giving that shallow pullback or consolidation. Right now on the daily RSI and MACD, we do have momentum to the upside. It does look like there is space for momentum to continue. But personally, I just feel like we need a little bit of development here before I'm going to be too excited one way or the other. So with that said, I'm putting my money on maybe a couple days of consolidation here and then eventually testing that $560 sometime later this week. Going out to Triple Q, rinse and repeat the exact same thing. We broke out of our diagonal. We have that 50-period moving average just above us. RSI and MACD look basically identical to the S&P 500, and we do have a horizontal support and resistance level that got broken and closed above on Friday as well, giving the nod to the bulls for the next couple of weeks. But again, because of this price movement last week, I would love to see a little bit more consolidation before continuing higher. We'll see if that is just my bias because I want it to give me a better pattern or if that actually develops. But I do think that we are going to test into that 480 level this week. Going out to IWM. IWM actually showing a much better pattern, in my opinion, going into this week. We did have several days of consolidation, Wednesday, Thursday, Friday last week, right underneath this diagonal resistance line. And we do have enough room here from current price location at around 194 up to about 201 for that 50-period moving average. So out of the three of these so far, I kind of like the setup on IWM the most. Going out to the Dow Jones. Dow Jones has not crossed or even come close to its diagonal resistance line, has been lagging a little bit and might actually have some catch up to play here. Similar to IWM, you can see that it is consolidated for a few days here and allowed price to close on Thursday and Friday just above that important 20-period SMA. Again, on the RSI and MACD, we have some room to run still. So I am kind of envisioning this week some catch up in the Dow Jones and the Russell 2000. On the Dow Jones here, coming up probably to about 410 this week. Going out to IBIT. IBIT had a great week the last 2 weeks, actually, coming off of Bitcoin's lows, had a double bottom here, testing on the 200-period moving average, broke out of our horizontal zone here, broke out of our diagonal last week, and got back above all of our daily moving averages. Again, have room on both RSI and MACD to the top side. So for me, this is run a little bit too much for me to want to jump in, especially because we are at a really important horizontal level right here that was tested back and forth multiple times over the course of several months before this big downward trend started. So what I would ideally like is to see this come back and pull back into the rising 9 EMA here, give us a trigger, and then be able to front run a breakout of this $54 level off of a lower trigger right here coming off of that rising 9 EMA. So that is kind of the ideal situation that I'm looking for. Whether or not we get that, we will have to see. When Bitcoin gets going, it can really just rip and defy gravity. So we will have to watch and see. But if we get that 2-3 day pullback into this 9 EMA and then get a confirmation candle to the top side, I will be adding to my longer term position there. And then I will likely add again once we break out of this 54.50 to 55 zone on IBIT. Going out to Ethereum, Ethereum has gotten just absolutely murdered over the last 6 months or so, but it is starting to show signs of bottoming. We have gotten back above both our 9 and 20 period moving averages for the first time since this really big bear market downturn started about 4 months ago. We have bottomed out on the RSI multiple times over that time frame and are starting to threaten to break into bullish territory. And we have also seen bullish divergence on the MACD. We are seeing lower lows and lower highs turn into higher highs and higher lows, and we should see that reflect in the chart in the coming week or two. Going out to XLB. XLB is kind of in no man's land to me. I'm not super excited about it until it gets back above $85. Until then, I could see it going either way with a slight nod to the bulls. Going out to consumer discretionary, nice little double bottom here. Got 200 period moving average just above at about 205. I'm not going to be super interested in it until we get a close above 205, but I wouldn't fault someone for trying to have played this breakout of the diagonal running up to that level last week. I think that has gone by us now and is no longer a trade just because we did close at the highs on Friday and we have these two moving averages directly above us. So this is a wait and see pattern, and just going to wait and see how this shapes up. But if we do get consolidation underneath 205 and then a breakout of there in the next probably 10 to 12 days, I would be really interested in playing that to the top side. Going out to tech. Tech broke our diagonal. We have room to run on both the MACD and RSI. We are back above the 9 and 20 on our SMAs. We are a little overextended in terms of just pure price action and pushing into the decreasing 50. Usually when price comes up to the decreasing 50 after a bearish movement, it gets rejected the first time and takes a couple of tests before it is able to get through. I think this time around, this is going to be very dependent on news-driven cycles and what is going on with tariffs and negotiations for trade deals with various countries, because this is impacting the semiconductor area of the markets heavily. So I think this is going to be news-driven. I'm not super interested in playing just up to the 50 period moving average because it's just a stone throw away. But again, if we get up to that level, high base for a couple days and then break out, I would be really interested in that. Or if we come up to that 50 and pull back and retest these curling moving averages on the downside, somewhere around 200 or 201, and then start lift off again, I would be very, very interested in that pattern. So I am keeping XLK on pattern development. Going out to XLE. XLE has a nice little breakout channel that could be playable here at around $83. I'm not super sold on it though. We do have a couple of different moving averages above us and a horizontal support and resistance level above us. So this one is a wait and see for me. Going out to utilities, we are threatening into the continuation of this diagonal line. If we do break out and actually get a close above that, that would signal the lead goes to the bulls. You can see we tested this a couple times, but we're not able to actually clear it and close above it. So we need to see a candle actually close above that line for that to be a good trigger. Going out to XLP, consumer staples. This is just no man's land. What a mess. I'm not even going to bother really looking at this chart any further. It is just in a big, choppy neutral zone, and I do not see an edge one way or the other on this one. Going out to XLC. XLC, we have reclaimed the 200 period moving average actually, and I am starting to really like this setup. We do have our diagonal resistance and the 50 period moving average above us, But I do assume that if we get up to that level and are able to close above it, that we are going to see a pretty significant rally in this area of the market. So I'm going to be watching this closely for pattern development. If we drop this out to a weekly chart, you can see that we have also gotten back above that 50-period moving average. And last week, we ended up closing right at the 9 EMA. If we are able to move higher from that, coming up to this diagonal or up to the weekly 20 SMA around $98 is kind of my T1, T2 targets. Going out to XLI. XLI kind of in the middle of a bunch of chop here from the left of the chart. It has moved a little bit higher. It broke out from a horizontal support level, but we are still below the 200, below the 50, and below our diagonal resistance line. So I'm not interested in it this week. If we go out to XLF, kind of similar story. We've reclaimed the 200-period moving average, the 9 and the 20. Have a little bit of room on the RSI and the MACD, gotten back above some important horizontal support levels, but we still have this diagonal and the 50-period moving average above us to contend with. So I am waiting for pattern development on XLF as well. Going out to XLV healthcare. This one actually, I really like the look of a break this week above the 20-period SMA and kind of a continuation of this little push and consolidation over the last 3 days. Looks really good to me, and I would expect coming back up somewhere into the neighborhood of 143 on the daily chart. Let's go out to the weekly chart on this one and see if we have anything in the way of that. Up to 143 would basically coordinate up to our 20-period moving average on the weekly chart. So I do like that. We do have a little bit of resistance here around the 140 level. So we could get kind of a T1, T2 situation on that and have two different targets, maybe scale in and scale out of that. But a close above this level, I think, is playable this week. Going out to gold. Gold is at its all-time highs, just pulled back a touch and is kind of consolidating here. Fought down below the 9 EMA and got back above it twice last week. As long as it holds above that 9 EMA for closes each day, I am assuming we are just going to see kind of a neutral range between 294 and 317. And I am not going to short gold by any means, but if it does start to look like it's going to weaken or roll over at all, I will probably sell some covered calls against longer term positions, but otherwise I am just going to be letting long term positions ride on this one. Going out to SLV, silver ETF. I think the lean on this one is probably to the bulls. We did have a really, really strong rip on silver, recovering almost all of the dip that we'd had over the last couple of months, and looking for this to come back up and retest around $31.50 or $32. I wouldn't mind some consolidation here in the $20 to $30 range first, however. Finally, for our charts, let's go out to DXY, look at the dollar index. We are starting to see a little bit of stabilization here, but we've seen this song and dance before. We stabilized and then ended up taking another big drop. This time we are stabilizing and it is yet to be seen whether or not we're going to get that next drop or if we are going to try to make a move higher. We are quite a bit below the 20-period moving average and the diagonal resistance, so I wouldn't be surprised here to see some kind of reversion to the mean and come back up into that 101, 101.10 price mark before really having a deciding movement one way or the other. We are pretty overextended on the daily RSI. The MACD has still been setting lower lows. Did just cross over, trying to signal that bullish movements might be coming, but I am staying away from this for the time being. Finally, let's go out to our heat map and economic calendar. Looking at the heat map, this is the 1 week performance from last week, and you can see a lot of green, a lot of money coming back into the market. Palantir had a 20% gain. PanW had a 6% gain, Oracle 7, Microsoft 6.5, Nvidia almost 10. So a lot of money coming back into tech, and I'm assuming that that is going to continue here for the next couple of weeks as long as there's not any big news items that derail the idea that we are getting negotiations on the table for trade deals. Finally, going out to Forex Factory, looking at the economic calendar ahead, we have a big list of items coming at us this week. Nothing on Monday, but we do have big items coming out Tuesday, Wednesday, Thursday, and Friday. So if you are trading around those, make sure you pay attention to that. Most of these are coming out early morning, anywhere from 5:15 in the morning out to about 7 a.m. So each trading day after 7 a.m., you are clear from having to deal with the volatility that might be induced by any of those events. But just know those events are going to be coming out in the morning this week for trading. With that, as always, guys, let me know if you have any questions. Hit me up in the comments, give me a like and a share, and I will see you next week.